Hello traders, you are welcome back to the Forex Geek channel. In this video, we are going to be diving into a simple stochastic oscillator trading strategy for beginners. This strategy is going to help you spot trend reversals, time your entries better, and avoid bad trades, okay? So let me just add the stochastic oscillator to the chart very quickly. Okay, let me just increase the thickness, right? Thickness of the lines. Okay. Now, the stochastic oscillator is a powerful momentum indicator that tells us when the market is overbought or oversold, making it perfect for identifying potential reversals. Whether you trade Forex, stocks, or crypto, this strategy works across all markets and time frames. By the end of this video, you will know exactly how to use the stochastic indicator for better trade decisions. So make sure to hit that like button, subscribe, and turn on notifications so you never miss a powerful trading strategy. Now let's just jump right in. Before we go over the strategy, let us break down what the stochastic oscillator is and how it works. Now, the stochastic indicator is a momentum oscillator that measures the position of the most recent closing price relative to the high-low average. Rather, the high-low range. Now, you will notice, you can see that this setting, this price field here, is set at low-high, right? So, what the stochastic oscillator does is that it measures the position of the most recent closing price relative to the high-low range over a set period of time. So basically, the stochastic oscillator tells us when the market is potentially overbought or oversold by giving a value between 0 and 100. It consists of two lines. You can see we have the percentage K line, which is the fast line, and we have the percentage D line, which is the slow line. Now, the percentage K line is the main stochastic value calculated based on the high-low range. Then the percentage D line is the slow line. It's a moving average of the percentage K. It is used to generate trade signals. So the key levels to watch are, the 80 level. Above 80 means overbought, signaling potential reversal to the downside. Then below 20 signals oversold, meaning that you could have a potential reversal to the upside, okay? Then crossovers between the percentage K and the percentage D lines give trade signals. Now that you know how it works, let's look at the best settings for this indicator. All right? Now, some platforms use the settings 1433, which work well for general trading. It works well for general trading. But depending on your strategy, you can tweak them. You can use the 1433 for a balanced, strategy. It's commonly used. Then for a more sensitive strategy, you can use 5 for your percentage K, then 33 for percentage D and slowing. This is more sensitive. It is good for short-term trades. Then if you are a swing trader, you can use 21, 7, 7, 7. It is smoother and it is better for swing trading. Okay? However, for this simple stochastic oscillator trading strategy, we're just going to stick with the 1433 settings. Okay? The 1433 settings, it provides a good mix of accuracy and reliability. Now, let's just go step by step through the stochastic oscillator trading strategy that beginners can use. The first thing is to identify the market trend. All right? First of all, identify the market trend. So before entering any trade, always check the overall trend. Always check the overall trend, okay? You can use moving averages, you can use trend lines. Let me even add a moving average to the chart. Now, okay, I'm just going to increase the period since this is the 4-hour chart. Remember that the moving average you are using depends on the kind of, trading. Let me just make it a 50 period moving average. See if this is the 4 hours chart. Okay. So now the moving average can also help you to identify the dominant trend direction, all right? And then also make use of your trend lines. It's very, very important. So once you have identified the trend, look for stochastic overbought or oversold signals. For a buy setup, when the stochastic drops below 20 and then crosses back above it, it signals a potential upward reversal, all right? It signals a potential upward reversal. Then, for a sell setup, when the stochastic rises above 80 and then crosses back below it, it signals a potential downward reversal. Then the next step is to confirm with price action, okay? To improve accuracy, always confirm the stochastic signal with candlestick patterns. Support and resistance is always important. Please always draw your support and resistance levels. They are very important. Okay, they are very important. So to improve accuracy, confirm the stochastic signal with candlestick patterns, support and resistance, or trend lines before entering a trade. Okay, a bullish crossover at strong support is a good buy signal. However, a bearish crossover at resistance is a strong sell signal. Then finally, for your entry and risk management, you can enter the trade once your crossover is confirmed. Okay? Then for your stop loss, you can place your stop loss below the recent swing low for a buy trade or above the recent swing high for a sell trade to protect against reversals. Then for your take profit, you can look for previous high lows, high levels or low levels, with a risk to reward ratio of 1:2 or 1:3 for your take profit targets. Now, a bonus tip, combine the stochastic oscillator with RSI. You can combine the stochastic oscillator with the RSI or even moving averages, just like I already did here, for stronger trade confirmations. Okay? Now, even though the stochastic oscillator is simple to use, traders often make some key mistakes, and here are a few to watch out for. The first is trading of every overbought or oversold signal. Now, the market can stay in these zones for a long time. Always confirm with price action, okay? And secondly, do not ignore the overall trend. The best trades happen when the stochastic aligns with the main trend. And finally, do not make the mistake of not setting a stop loss, all right? Always protect your trades with proper risk management. It is necessary. And there you have it. Now you know how to use this simple stochastic oscillator trading strategy for beginners to time your trades better and avoid bad setups. If you found this video helpful, don't forget to hit that like button and subscribe for more trading strategies. Also, drop a comment below. Do you use the stochastic oscillator in your trading? What is your favorite setting? Let us discuss in the comment section. In the meantime, thank you for watching, and I hope to see you in the next video.